the fast-moving world of crypto, most layer ones either burn bright and fade out or just quietly stall. But one blockchain has kept building, not by chasing hype, but by delivering real tools, real innovation, and quietly setting itself up for what's next. And folks, the blockchain I'm referring to is Neo, the blockchain that helped pioneer smart contracts back in 2014. And today it's not just still around, but it's actually launching new tech, rewarding users with true passive yield and going all in on the future of AI and Web3. Now, folks, in a space as fast-moving and unforgiving as crypto, survival alone is impressive. But Neo hasn't just survived, it's actually managed to evolve over the time, and that deserves some serious respect, in my opinion. If you were around in 2017, you'll remember Neo back then was once called the Ethereum of China. And as one of the top performing layer ones during that bull cycle, it was one of the few projects offering a serious smart contract platform at a time when the space was just waking up to what dApps could actually become. But here's what was really wild. While many of those other projects either disappeared, stagnated, or pivoted completely, Neo kept building. Through multiple bear markets, changing tech stacks, regulatory waves, and shifting narratives, the Neo team never went quiet. They didn't launch forks or new tokens every cycle. They refined the vision. They pushed forward technically and kept their core values intact: accessibility, fairness, and real usability. It's rare and it's commendable. Now, folks, Neo isn't just some legacy chain coasting on its name. It's an OG that introduced the dual token model with Neo and Gas, launched delegated Byzantine fault tolerance consensus, and returned ICO funds to the investors. And today, Neo is rolling out new infrastructures just like Neo X and SpoonOS. It's becoming one of the most complete, forward-thinking L1 ecosystems in the space today. Now, let's talk about the developers for a second. Most chains require you to learn Solidity or Rust just to be able to build. But with Neo N3, you can build in real-world languages like Python, TypeScript, JavaScript, and more. It also comes with native features, oracles, decentralized storage via Neo FS, Neo Name Service, and a built-in bridge to Neo X. So less developer friction, fewer lines of code, and full software developer kits and tools that are ready to go. Now this, folks, is where things can get pretty futuristic because Neo is building SpoonOS, a Web3 native operating system for AI agents. What's the goal, you may ask? It's a sentient economy where autonomous agents build, coordinate, and transact on-chain. Projects like Inflective and Ortec are already building in this vision. And Neo isn't just keeping up, it's building what's next. If you're an Ethereum developer, meet Neo X. It's an EVM-compatible sidechain with an anti-MEV baked in at the protocol level. Not an L2 patch, a real fix. Neo X uses enveloped transactions plus Neo's DBFT consensus to block front-running and confirm transactions all in one block. It's fast, it's fair, and it's final. Whether you're trading or building DeFi, Neo gives you all the tools that you need plus the fairness and finality that you want. Now let's talk about yield. Neo runs on a dual token system. Utilizes Neo for governance and Gas for utility. You can hold Neo, vote with it, as well as earn gas at the same time. No staking, no lockups, and no LPs. It's about 15 to 20% APR and it's completely passive. Now the Flocks model even compounds it further by converting part of your rewards into LP on Flamingo. Hands off, no DeFi headaches, just consistent rewards. DeFi on Neo is already relatively unique. Flamingo Finance is the flagship DEX and it features an actual on-chain order book and runs natively on N3. It benefits from DBFT finality, the gas reward system, and Flocks auto compounding. And over on Neo X, early apps are already using the MEV protection for more fair trades. A newer DEX that I wanted to spotlight is called CarrotSwap. And like I said, it is a new DEX. It's built on Neo X and it's already showing early user traction. Now keep in mind, Neo X is still ramping up, but CarrotSwap is proof that builders are already taking advantage of what the network has to offer. It's one of the first DeFi platforms live on Neo X to create a fair trading experience. And that's crucial because if you've ever been front run or had your slippage blown out on another chain, you know exactly how painful DeFi can be. So with CarrotSwap, we're already seeing real users interact, provide liquidity, and test out what their DeFi could actually look like without worrying about sandwich bots or validator games. As the ecosystem grows, CarrotSwap could be the first of many dApps that redefine what trading on an EVM chain can feel like. Now, quick sidebar here, folks. What is EVM and why does it matter? Now, if you've heard me mention EVM a few times and you're not 100% sure what that means, let me break it down for you really quick. EVM stands for Ethereum Virtual Machine, and it's basically the engine that runs smart contracts on Ethereum and now any EVM compatible chain. That includes Polygon, Arbitrum, BNB chain, which is Binance, Avalanche, and now NeoX. So when a chain says it's EVM compatible, what they're really saying is, hey, if you know how to code in Solidity and use tools like MetaMask or Hardhat, then you're good to go here. And that's huge because it means developers don't need to learn a whole new language or tool chain. They can port over existing Ethereum dApps or spin up new ones without any friction. And NeoX takes that even further by solving something that most EVM chains still struggle with, which is MEV. So MEV stands for miner extractable value, or more broadly now, maximal extractable value. It's a fancy term for a frustrating problem. And basically, when you send a transaction, whether it's a swap, a mint, or anything DeFi related, it goes into the meme pool before it's included into a block. And in the tiny window of time, bad actors, often bots or validators, can see your transaction coming, front run it, or reorder it to their advantage. You lose and they end up winning. It's like someone cutting in line every time you try to buy a concert ticket, if that makes sense. And NeoX fixes that situation by preventing MEV abuse before it even starts. Most chains try to fight MEV with external bots or rollups, and NeoX just bakes it all into the chain itself, and that's what makes it fair. That's why it matters for the developers and users alike. Neo also supports builders through Grant Shares DAO, EcoFund, and EcoGrowth. If you've got a project idea, you can get funded on-chain through real governance. Now, speaking of other chains, it's worth noting that Neo was recently featured as a part of Binance's 8-year anniversary celebration, which if you head on over to Binance's X account, you can find out more by highlighting over the website that they put on here for the find out more suggestion. But just by clicking on the graphic here, we can see that Neo's logo is right there on the 8-year anniversary celebration piece. It's a huge milestone for one of the largest exchanges in the world, and to be highlighted in this kind of lineup shows that Neo isn't just building in a vacuum, and it's being recognized as a key player in the broader Web3 ecosystem. It's a nice reminder that while many projects fade, Neo continues to stay relevant, integrated, and supported across major platforms. I wanted to take a moment and look at the price action on Neo as well, because once again, this is something that's been around in the crypto space, which is a fairly new industry and a new asset class. And sometimes we don't have really any data on a lot of these new projects as they come out. And for Neo, this is something that I remember personally as it really had a incredible move and a run back in 2017 specifically. And then even once again in 2021. And right now, I think that we're at a place where there's potential opportunity there as well. So here we have Neo. Obviously, we've had two pretty sizable impulses over the last few years. And then currently right now, we're pretty much range bound towards the lows yet again. I can remember this exact day when we were running up and exactly what I was doing at the time. I was at a restaurant. I was just checking my phone constantly on other things and noticed that Neo was obviously making a pretty sizable run here. This was actually right after the market topped for the most part back in January and December. So January of 2018 and December of 2017, pretty much. And Neo was one of the few that actually was a laggard at that time and continued to run into the following months after that before, and basically coming down with the rest of the market, topping at literally $199, just about 200. Incredible move there. Complete retrace, ranged around at the lows for quite some time. Another major impulse in 2021 as we had that most recent bull market in crypto and pretty much in everything back then as well, topping out around May and April of 2021 before once again coming back down to these regions here. Now, without looking at the potential price action in the sense of predictions and what could happen, the technicals here are something that I tend to see time and time again, and this is actually an asset that I would consider putting on some risk onto. Once again, do what you will. This is just educational purposes only. Do your own research, not indicating that this asset has a 100% guarantee of seeing an impulse to the upside. But what I do is I do look for things in this caliber that are pretty much at the lows. And I mean, you're trading around the range lows. And once again, we've seen this over here without pulling up other assets. I've seen this time and time again where we've seen a really long expanded time where you're consolidating. And even if we're not going to push up into incredible, crazy prices, just simple price recovery, which we do see time and time again, just up to the macro 382, which is just from the high that I'm looking at right here from back in 2021 down to our low. this entire move down would be retraced 38.2% basically. And that is a very common thing we see. And you could very well see something along those lines and then maybe come right back down into these lows yet again, right? But right now you're trading at the absolute lows. You got pretty low risk as far as coming in and noting any more downside. And then if there is, you can very easily, invalidate and determine if you want to, cut your loss or anything of that nature. But for this, I could see a really, really decent bounce here in the coming future here. And one is a untapped quarterly level, just sitting at about $13. And at the time of making this video, we're trading at 6. So that's a sizable move in itself, right? Without even looking all the way up to that 382. That is almost 100% move if we were to see it. And actually, it's well over that. I'm sorry, 150%. So just that simple move there. This is, this chart looks so small and squished and condensed, but there's some really big potential here if we were to get moving here. At that point, I would look for that as the next major resistance to see any kind of flip. Next key level is going to be this moving average you see right here. This is actually the anchored VWAP. So this is a volume weighted average of price from that overall 2021 high. You can see how well it's being respected right now. The last couple of times we've come up, we've gotten rejected from it pretty harshly. So if we were to come up and flip this region again, this would definitely be an area to be aware of as some resistance. And that does sit about $19, $20 at the current time. And then if we were to flip that, obviously the market would probably be in a position of pretty good bull market sentiment and all things considered. I would target after that up to this untapped 6-month level. And then of course we have an untapped yearly pivot, which is a high time frame average of price, very similar to a 200-day moving average, but this is for a whole year and it does not move. So it will remain right there at $60. And that does come in right around that 382. So I've had to box off the biggest target area that I'd be looking for on NEO in the somewhat distant future here. It would be up and around this area, but I would not overlook blindly if we were to start to see an impulse around these regions. These are definite areas where I'd consider taking profits, locking in gains, reevaluating, and then so on, right? So if I was building a position around these levels here, I'd probably tend to scale out along the way as we come into these major areas here. But I do think that we have some potential here with NEO in the mid to long term, and that's how I would envision we get there. NEO has been building for over a decade with zero downtime, zero drama, and no dilution. With a developer-friendly N3 platform, an EV-compatible and MEV-resistant NEO X, and a future-forward vision with SpoonOS. If you are a developer, NEO is a wide open opportunity. And if you're a user, it offers real passive income and secure DeFi. If you'd like to learn more about NEO, feel free to check out the link down in our description below, or head on over to neo.org to explore the ecosystem yourself. NEO is a proud channel partner here at DataDash, and as always, we appreciate you supporting the channel by watching and engaging with this content. I'll see you all in the next video, and until then, everybody, cheers.